Are you an NFT investor, artist, or creator, and are you wondering about the tax implications to your NFT transactions? The IRS just issued Notice 2023-27, which provided new tax guidance related to how taxes apply to NFTs. Specifically, in this notice, the IRS has outlined how certain NFTs are going to be taxed as collectibles. In this video, we'll go over what types of NFTs are going to have this tax applied to it and what the overall tax implications are to this taxation structure. So what is an NFT? An NFT is a non-fungible token, which is an asset that's stored on the blockchain that can't be replicated. This can represent many different types of assets. It could represent music, it could represent artwork, even a tweet. So the definition of an NFT is general, and then the representation of that NFT on the blockchain, whatever type of unique asset it's representing, can vary on a case-by-case basis. So what are the tax implications if your NFT is taxed as a collectible? Well, the tax rate that's applied to collectibles, if you held this asset for a long-term period, which is over 365 days, will be likely at a higher rate than if it wasn't a collectible. For assets that you're buying and selling that aren't a collectible, that you hold for more than 365 days, which is a long-term holding period, you'll usually pay a capital gains rate of 20%, sometimes 15%, in some rare cases 0%, but usually 20%. If the NFT you're holding is taxed as a collectible, then the tax rate is not going to be 20% or any of the lower percentages. It's going to be 28%. So it comes with a much higher tax rate if an NFT is taxed as a collectible. If you're holding NFTs in your IRA and those NFTs are going to be taxed as collectibles, you have a large potential tax issue at hand. That's because collectibles that are purchased within IRAs are supposed to get treated as a distribution. That means that if you purchase an NFT within your IRA, this is going to trigger a taxable distribution from your IRA that will also have a 10% tax penalty associated with it. So you need to be very careful about the assets that you're purchasing within your IRA. And if you have purchased any NFTs that are going to be classified as collectibles, this needs to be addressed appropriately. So based off of this guidance, how will we determine which NFTs are taxed as collectibles and which are not taxed as collectibles? The IRS has outlined a look-through analysis that will have to get applied to each specific NFT. What this means is that we'll look through the NFT to what the NFT is representing, whether that's an underlying asset or service that the NFT is representing. And then based off of the nature of this asset or service that the NFT represents, and whether that is a collectible or not a collectible, that's how the NFTs will be taxed. So how will this look in a couple brief examples? If you purchase an NFT and that NFT represents ownership or a share in ownership of a gem, which is taxed as a collectible, then that NFT in that case would be taxed as collectible, because the NFT is simply a representation of the blockchain of a type of asset that's already classified as a collectible by the IRS. In another example, if you're purchasing an NFT that represents an ownership right to a plot of land, this would not be a collectible, because we would look through to the NFT to see the asset that it's representing. In this case, it would be representing a plot of land, which generally is not taxed as a collectible. So this look-through analysis will have to be applied to each NFT that you purchase, and based off of the overall nature of the NFT, it may or may not be taxed as a collectible. Notice 2023-27 provides a basic framework for the taxation of NFTs, but there needs to be much further guidance and clarification to this basic framework. In fact, the IRS has asked in this notice for taxpayers to provide comments and to provide additional support in crafting this guidance with the IRS. Some areas that they're looking specifically for comments on is on the definitions of NFTs and how exactly the look-through analysis should be applied to NFTs. One thing is for sure, if tax professionals and taxpayers are going to have to provide this look-through analysis to each NFT, it's going to complicate their accounting and taxes. Now, this, like I said, is a logical approach considering the fact that NFTs can represent a variety of type of assets. So, this is going to be a developing area where we do expect future guidance, and it's going to be an area where we're going to have to adopt new accounting practices and new tax practices. So this is an area as an NFT investor or seller you're going to want to stay on top of. Are you looking for a CPA firm that can assist you with your digital asset portfolio or Web3 business? Are you buying and selling cryptocurrencies and NFTs? Look no further than Camuso CPA. We've worked with digital asset investors and cryptocurrencies since 2016. And with proactive tax advice, accurate tax preparation, and diligent accounting, we've saved investors thousands and cumulatively millions of dollars with effective tax strategies and accurate accounting. If you're looking for a CPA firm to assist you with your digital assets, contact me and my team at Camuso CPA today.